For those of you who've been tuning into these videos over the past few months or years, you realize that I've really not been a huge fan of the banks. And sad to say, I remain that way. Um, my reasons are these. Um, banks typically make money by lending long-term and borrowing short-term, right? When you lend money to the bank, which is them borrowing it through your deposits, they're paying you a lower interest rate than where they are lending that money out through corporate loans or mortgages or personal loans, et cetera. Your deposit dollars are considered short-term because you can withdraw them pretty much at any time, depending on the type of account you have. Whereas the loans are made over a period of time, ranging from months to years. So in that sense, in general, banks like a positive upward sloping yield curve. That's not what we have right now. We have an inverted yield curve. Now, banks have gotten around that by paying lousy rates on deposits. So it sort of mitigates the effects. So from their point of view, they've effectively created their own internal positive yield curve, but they are constrained by the real world and it limits their profitability. Now, that doesn't mean you should go out and short banks. The reason I'm sort of lukewarm on them is they actually pay a very nice rate of return in many cases through dividends, and they're bolstered by stock buybacks. The CCAR results on the largest banks that came out in the spring generally allowed them to up their dividends and up their capital return policies. And so what you find is you generally have a higher yield by leaving your money in a bank stock than you do by leaving it in the bank itself. So that's sort of a mitigating factor. I think right now, barring some major turn either in the economy to the positive side that will increase loan demand, or something that will abruptly change the yield curve, which will have its own potential problems. The picture for banks remains murky. They remain a solid investment. I'm going to say a boring investment because I don't see a catalyst that's really going to propel them higher. But I don't see a sector that, if you find banks that you think have a good business model, that you think might be a little bit underpriced relative to their peers, there are situations where I would say, yeah, go for it. It's not the worst place to park your money for a while. Of course, with any stock investment, you have the risk of capital loss depending on when you need it. But for a longer term holding, they're, I think right now, the best you could say about the banks is they yield well, they're relatively boring, and potentially in the future there could be some catalyst, but I don't see that causing anything that's really going to make banks an exciting investment in the near term.